So today, I want to get into this topic and just help you sort out the tax implications of mutual aid. Welcome to the Sunlight Podcast. In this show, we're talking about taxes, money, and careers for self-employed people who have a big vision for changing the world with their work. I'm your host, Hannah Cole, artist, tax pro, and the founder of Sunlight Tax. If you're a creative or soul-centered entrepreneur or wellness practitioner who wants to grow your business sustainably, manage your taxes, and build a stash of fuck you money so you can control your time and have a bigger impact with your work, you are in the right place. Hello, beautiful. Welcome. Today, I want to talk to you about something that is both relevant to everyone, because I know so many of you who listen to this podcast are just incredibly kind-hearted and generous souls. And many of you in past lifetimes have asked me questions about mutual aid and, giving generously where the need is, and even offering fundraisers with your art or printing t-shirts. I've been asked so many questions about mutual aid and giving money that I thought I would do an episode today that can serve both the greater world in the US about, mutual aid questions, but also a very acute need over what is happening right now where I live in Western North Carolina. This region, as I'm sure you know, has been hit just impossibly hard by Hurricane Helene. And many people here need money and started mutual aid funds, myself included. So today, I want to get into this topic and just help you sort out the tax implications of mutual aid. All right. So let's jump into it. Okay. So the number one question that I've been receiving, and also, by the way, before I get started, I just want to credit two people. My friend, Catherine DeVos Devine, who is an arts attorney, she asked me these questions because a lot of people that she is serving are asking her in response to the devastation here in Western North Carolina, Eastern Tennessee, North Georgia. So these questions are sourced in part from my friend Catherine. And also, I want to credit Brian Colvin, CPA. Brian and Hillary, his wife, are both CPAs and just amazing human beings, generous, kind human beings. They are from Asheville, but not in Asheville. And so Brian had the headspace to help me fact check everything in today's episode, which I needed because, I'm sure you've heard this story by now that I lost everything in my studio. And of course, it's just, life has been crazy. First living in the dark, living without power, internet, cell phone, and then slowly getting those services back. So I'm mostly up and running again, but it's nice to get just a check-in from somebody whose executive function is working better. So a big thank you to Brian Colvin for that. And you can check out Colvin CPA if you're curious about those two. They are just truly delightful human beings that I recommend without reservation. All right, so let's jump into these mutual aid questions. So question number one, will artists or other people who are doing this receiving money via PayPal, Venmo, or cash need to report this as income? So when you set up your own fast action mutual aid and people are just giving you direct money into your PayPal account, your Venmo account, do you need to report it as income? Are you going to be taxed on that money? Well, I have some good news for you here. So if that money is given to you as a gift or as a donation, 100% with nothing exchanged, that's very important, then it will not be considered earned income. The good news here is that gifts are not taxable income. You do not need to report gift income and you are not taxed on gift income. But I do want to be very clear that this is regulated and you need to be very careful. You can't just classify a bunch of income you make as gifts. The IRS is extremely strict about this. So you want to document that these are gifts. Ideally, if the person giving you the money can put a note in with the PayPal or Venmo donation that says what it's for, says that it's a gift, That is ideal. That's what you want. You need some kind of written proof. They could also do it in a follow-up email. You could write to them and clarify, hey, is this a gift? And their answer back, that will serve as your proof. So you want to document those things, screenshot it, print out a list of everything in your PayPal and highlight all the donations. However you want to do it, keep that with your tax files. All right. That is your proof that that is not actually taxable income. And yes, PayPal, Venmo, they're not going to know what is a gift and what is not. And when PayPal or Venmo sends you a 1099K in January reporting all the money you made through that channel, they're absolutely going to include this income in that 1099K. And it is your job to cancel it out. You are going to need to take out, go through every donation or gift that you receive through that channel, and you are going to have to do the work of pulling it out of that taxable number that you report as income on your Schedule C. You may need some help with a tax professional doing this. It's not necessarily an intuitive process. I'm just telling you what you need to ask for. Okay? I hope that helps you. Now, of course, when the giver is giving you money into your PayPal or Venmo mutual aid, it's important to know that that is not a tax deduction for them, right? Because you are probably not a 501c3, right? You are not organized as a nonprofit. Of course, if you are, great. Then it's tax deductible for them. So that's great. If they happen to itemize, they will get a tax deduction for that. FYI, only 10% of taxpayers itemize. 90% of us take the standard deduction. And so for most of us, our charitable contributions are not actually deductible anyway. This is something I don't really like, but it's true. And so for the most part, most of you are not going to get any deduction for your charitable contributions under any circumstances. It's sort of not a huge deal. It's annoying, but not a big deal. Okay. Will people receiving money via PayPal, Venmo, or cash be able to offset any tax liability if they use this income for mutual aid? So here's the thing. These are gifts, right? Because these are gifts, you can't offset income by expensing the funds to another organization. So there's not going to be an offset. You were never reporting the income, so you're not canceling out the income, okay? You are turning around and giving the same money as a gift out the door again, right? So this is money that's not being reported one way or the other, okay? So that's the important thing to know. You're not reporting it as income, so there is no offsetting, okay? All right. Is there any benefit to setting up PayPal, Venmo relief accounts as a business? In general, we don't recommend this because PayPal and Venmo are going to take out their fees, right? So basically what I want to say here is I would attempt not to be mixing your business and personal stuff here. In general, you want to take in a gift through your personal account if you can, not through business. If you take it in through business, it's going to, potentially have the appearance of being earned income for your business. Of course, you can still put an explanation on your Schedule C and you can cancel it out. If, for example, PayPal now sends you a 1099K that reports all of that money as income when some of it was gifts. So that's the reason that you want to keep it into a personal account and not a business account in the first place. But if you, like me, were in the dark with no cell signal whatsoever and no internet and absolutely no ability to set up a new PayPal account, and the only link you could access was the one that you use all the time, which is your business link. And literally, I'm describing myself, right? I was in the dark with no water, no power, no internet, no cell service. And so I had that link for my business account available. And I knew that, that window of media attention on this disaster is short. That money would want to come in quickly. And if I waited, not as much would come in. So I sent out my business link, even knowing that it was not the right thing to do, or not the perfect thing to do, because I felt like getting money and having to deal with some annoyance around, tax stuff was going to be better than not getting any money in the first place. So my mutual aid link that I sent out was my business link. And it's annoying because PayPal is taking its fees. I'm just deciding I'm covering those fees and I'm going to still give 100% of the donation amount, even though somebody took a cut out of it. So yeah, frustrating, but what are you going to do when you're sitting in the dark? Sometimes there's not much you can do about it. If you have better circumstances than we had here as Helene struck, then absolutely set up a separate account or give out your personal link and not your business link. All right. The other thing I want to just clarify for you here is about what a gift is and is not. So the IRS wants to be very careful that gifts really are gifts. And so for this reason, if you exchange anything for the money, it's no longer considered a gift, right? What is income? Income is an exchange of money for some kind of goods or services, right? So in other words, if you do a fundraiser and you offer something for the money, now it's not a gift anymore. Okay. So this is a little wrinkle on this. If somebody gives you pure mutual aid, nothing but money, it's just money, that can be classified as a gift. If you run a fundraiser, and I'll use myself as an example because I've been thinking about potentially myself trying to like kickstart my own studio practice by doing a bunch of sort of small scale weed images, which, in my art, I have used the image of a weed because it's so resilient and because it is nature, but not on man's terms. It's a symbol I really love, and it's a symbol that fits pretty damn well for this disaster. I want to put out a symbol of resilience, right? And weeds are certainly that. So I've been thinking about doing a fundraiser where I make perhaps 100 small weed works on paper and sell them for a lower than usual price and just donate the proceeds, right? Now, in doing that, of course, I will actually be making income. That is going to count as income because I'm giving a drawing. I'm giving a work on paper in exchange for the money. So unfortunately, when you run a fundraiser, it does create that tax implication where now you do have to report the money as income. So this might kind of influence you one way or the other about, people might be more willing to give money if they get something in exchange, but now you've got a tax implication to deal with. To me, I think like, is that a deal breaker? Like, I don't try to stop my life because there's going to be a tax implication. I try to do things well and, just like account for taxes in the way that I price things. Just in general, that's sort of a global feeling that I have personally. But it is something that you want to think about as you set up your mutual aid, because if you really, really don't want to have to set aside money to pay taxes on income that you then turn around and don't donate, then you want to be careful not to give anything in exchange in the first place. The other thing I want you to know in this conversation is let's give a quick review of what a charitable donation does in your taxes, because a lot of people feel really confused about that. If you donate money to a registered nonprofit, and you have to actually look up on the IRS website, or there's a lookup tool on the IRS website to see if a charitable organization is actually, in fact, properly incorporated as a nonprofit. If you give money to a nonprofit, an official nonprofit, then yes, that money is deductible as a charitable donation if you itemize, right? Not if you take the standard deduction. So you need to be careful if you donate money to just a person like Hannah Cole or Sunlight Tax, right? Then that money for you, your gift, is not going to be tax deductible. For most of us, this point is moot in the first place because most people do not get any deduction for charitable contributions. So let's do a quick review of itemized deductions here, because this is where that fits in your taxes. So every US taxpayer gets one chunk of their income tax-free, okay? This tax-free chunk of income is, you get to choose the bigger of two situations. You can either get a fixed amount of tax-free income, and that fixed amount, we call it the standard deduction, or you can get a variable amount, and that variable amount is called itemized deductions. Now, you're only going to itemize if you have more itemized deductions than the standard deduction. Why? Because you get to take the bigger number. So the logic is very simple here. You're going to take the one that's bigger. If you don't have itemized deductions that are greater than the standard deduction, you get a bigger deduction by taking the standard deduction. The standard deduction is around $13,000 for an individual double that if you're married filing joint, cut that kind of straight down the middle if you're head of household, meaning you on your own support dependents. Okay. So the standard deduction is generous, it's large. Now, what are itemized deductions? A really common mistake I see is that people confuse their business deductions with itemized deductions, and business deductions have nothing to do with itemizing. So please, please, please understand, if you have a profit motive, you get all your business deductions. We don't even have to worry about that conversation. Itemized deductions are something different. They are charitable contributions, medical expenses that exceed 7.5% of your adjusted gross income, mortgage interest, and state and local taxes capped at $10,000. Those 4 items you put together into one bucket. And if that bucket has more money in it than the standard deduction, so to repeat, around $13,000 if you're an individual, around $26,000 if you're married filing jointly, somewhere in between that if you're head of household, then you will only itemize if you have more than $13,000 of those 4 items, those 4 itemized items. Okay. In other words, if you're not a homeowner, you're very unlikely to be itemizing in the first place. And if you're not giving, $3 million to the Metropolitan Opera each year, you're also probably not going to get any deduction for your charitable contributions. Okay. So because charitable contributions fall in that itemized bucket, you're only going to get any deduction for your charitable contributions if all 4 of the items in that itemized bucket are greater than your standard deduction for your filing status. Okay. So I hope that clarifies who does and doesn't itemize. Just to lay it out a little more clearly, most people who are not very well heeled or not homeowners, so renters, most of us, we don't itemize. We take the standard deduction. But don't worry about your business deductions. You absolutely still get those. I am an example of a person who does not itemize, but I do get all my business deductions. Okay. These 2 things can coexist. All right. So I realize I'm spending a little extra time on that clarity, but I know at least, at least 10% of you listening were confusing those things in your head. So hopefully I helped pull that apart for you. Okay. So I hope this has been really helpful for you to understand the implications of your mutual aid, of your generous contributions. I love so much the spirit of the creative community and the healing community who do so much to help other people. And I know that you are the first to pull together a link to send out mutual aid. And you're also the first to be like, I'm going to do a series of prints and sell them and donate the proceeds. I've also had many people in election season make their own t-shirts and sell those and donate the proceeds to the candidate of their choice, which is another wonderful and generous impulse. So for all of you who have those generous impulses, who have given money to those of us in Western North Carolina who are in dire straits, or to political candidates that you love, or to other wonderful causes that are important to you, I just want to say from the bottom of my heart, thank you so much for that generous, generous work that you do. And I hope this podcast helped you clarify what to do about the taxes. All right. I hope that helped you. If you have any questions, follow-up questions about this, I will do my best to answer them on Instagram. So you can feel free to contact me. I'm at Sunlight Tax. Also, please check out my show notes for places that I would love if you are looking to connect your dollars or your fundraiser to the people in the Western North Carolina area devastated by Helene, many of whom are at threat of closing their businesses or who lost all of their art, lost all of their work, or just need the money to survive. I will put 3 of my favorite links in the show notes. One is for grant money for local businesses to survive and to bridge those loans, the timeline of the loans, which take a little while to come into bank accounts. Many businesses can fail during that time period. And so grant money is critically important to help the businesses here survive. 2, the Artist Relief Fund is another fund which is giving grant money to artists to help rebuild their studio, reclaim their lost or missing art, and get back on their feet again. And 3, I am giving you a link to my mutual aid PayPal link. Again, this is my it is my business link. I am eating the fees myself, but all the funds that you donate to my Sunlight Tax PayPal. And yes, put a little note on there as you give it that it's a gift. I will screenshot it and that goes in my tax records. But that PayPal link, I am turning around and giving 100% of that money, even eating the fees myself. I am giving 100% of that money to people here in my area who I know personally and who need the money. So the thing that's, is it as equitable as it possibly could be? No, because I don't know everyone in the world. Like that is the failing of mutual aid. But the good thing is that the people that I can help do not have to apply. They do not have to bother with paperwork and bureaucracy or red tape at a time that they have the least ability to do that. It's just money they can have. They don't have to pay back, and it will help them very quickly. So those 3 links are all wonderful. I encourage you to give a donation if you are able. And if not, I just thank you so much for listening to this and just for your generous spirit in general. All right. I'll see you on the next one, everybody. Bye. Thank you for listening. If you like the show, be sure to subscribe, leave a review. It really helps, and share it with a friend. I'm so grateful. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links we reference at sunlighttax.com/podcast.